Good afternoon, this is Mike Peddleson, the Bear Market Investor. The market update for Friday, September 9, 2011. We're here looking at the S&P 500 stock index in the hourly time frame. We're also going to be zooming in to show you finer detail in the short-term wave structure. Now first, let's have a look at our hourly chart. Going all the way back to the 2000 peak in the S&P 500 quite a while ago, I was able to establish long-term areas of support and resistance. Those are right here and right here. They were established using both arithmetic and logarithmic scaling. This is my own original chart work. If you want more detail on that, and especially how it looks in the long-term charts, please review some of my prior videos. As I've noted in my prior videos also, many Elliottians or market analysts that are using Elliott wave or loosely following Elliott wave, I believe, have misidentified the top of the ABC correction from the March 2009 lows to be the actual price peak of the counter trend rally itself. In fact, I believe the wave structure shows us that it's this point right here. I've showed you why in prior videos. I do recommend that if you're not familiar with what I'm talking about, please do review those. Also, I have a very interesting chart showing you a very fractal breakdown of the volatility index and why I believe we were able to determine right about where the market would peak here before the bear market or larger bear market resumed. Now, from the peak here of our Elliott wave structure and the counter trend rally, we have established wave 1 down, wave 2 up, wave 3 down, wave 4 up, and I believe we may be now carving out wave 5 down. However, we do not have confirmation of that just yet. We still need further confirmation. That will come when this channel here breaks down and we take out this third wave low. The big hint, of course, will be the breakdown of this channel. This originally took the form of a zigzag. From there we had a sell-off that looked like 5 waves down to this point right here. However, this part was a little bit in question. That opened up the door for the fact that this was in fact a 3-wave decline right here. From there we actually had what appeared to be a triangle 4th wave formation. Triangles are very common in 4th waves. The reason it didn't turn out to be that way, as I had identified it after we began rallying here, was because of the fact that I misidentified this wave right here. I went into that in detail in the prior video. In fact, I read this as really a 3-wave rally right here, when in fact it was a 5-wave rally. That suggests that this was in fact really an A wave of a forming double zigzag pattern. Once we began to move past this peak right here, I was quickly able to identify my mistake and show us and establish this channel right here for the double zigzag pattern. As I've noted, it is also taking the form of a bear flag. Very large bear flag actually too. If we are indeed breaking down from that 4th wave right now, we should see this channel break. We will take out this 3rd wave low. Now, in the 5th wave, the only real need is to move below this 3rd wave right here, the termination point of this 3rd wave. But it has to unfold in 5 waves. If this was the 1st wave right here and this was the 2nd wave up, we are probably working on right here the 1st of the 3rd of the 5th wave down. Once the larger 5 waves completes, that we're looking to end somewhere between here and perhaps maybe that 1050 area in the S&P 500 stock index. However, it could move lower. We should see a larger 2nd wave rally. That 2nd wave up will bring us between the termination point of this 3rd wave down right here and the 4th wave up, or extend beyond that. The 2nd wave up here, because this retraced a large portion of this 1st wave down, was why we did not have a larger rally. Usually the rule of alternation suggests to us that we should see something of a more minimal retracement when we see a more maximal retracement right here in the second wave, more minimal retracement in this fourth wave right here. And that's in fact what we saw. We initially started out in and around just slightly above the 38.2% retracement with this first zigzag. But then we moved on above it to more or less move right to that 50% retracement. That's a fairly minimal retracement. Moving beyond that would be a more maximal retracement, moving into that 61.8, 78.6, or perhaps even beyond that. That's not what we're expecting here. And that's one reason that I believe that, in fact, our correction in the fourth wave has in fact ended. Now, I'm not sure that we've already begun this first of third wave of the fifth wave down just yet, or if we're still correcting in the second of the fifth wave. This could either be a 5-wave pattern or a 3-wave pattern. I'm not sure what it is, and we haven't taken out this low yet. And again, we have not broken down from this larger channel. Triple threes or triple zigzag style formations are the max. We cannot have anything more than that. That means that if the market wanted to continue to correct, and I misidentified this 5-wave decline right here, and it's really a 3-wave decline, then of course we could in fact continue to correct in a triple zigzag formation, probably retaining this overall channel. Now, I don't expect that that's likely the case. I do think that we're already in the fifth wave down, and that there will be more downside yet to come. Again, moving us below this third wave termination point, perhaps as low or lower than the 1050 area in the S&P 500. But what really dictates that is wave structure. We have to decline here in 5 waves. Once we see the probability that we've already declined in 5 waves, then we can begin to assess how much more downside, if any, there is left. From there, I'm going to exit my short position. I'm going to let that second wave rally erupt. I'm probably not going to long the market at that point, because second waves don't necessarily have to be large retracements. As I noted, it could just come between here and here, but it could extend beyond that like it did right here. Okay? This was a very maximal retracement of this entire decline right there. So, it's likely to be sharp. I don't want to be short the market when it erupts, but I'm also not looking to long the market when it does. Swing traders could look to do that, but note that when that larger third wave begins, after the second wave up completes, we will likely see a very violent sell-off. If you're still long the market, especially if you're leveraged in a long position, that will kill you. So, just be very, very cautious, whatever it is you do there. What I'm doing, again, not offering advice necessarily, I'm just saying that what I'm doing is I'm going to exit my short position here once we complete the larger fifth wave down here in the 5 waves down that we're expecting before that 1 degree higher second wave up begins. From there, again, I'll just look for a termination point of the second wave to short the market again. Now, there are many different places that could lead us. Certainly one area that is an area to eyeball when we do move up in that second wave rally is this long-term trend line right here. As you can see right here, and again right here, this has acted as resistance. It acted as resistance temporarily, and then again support in this area right here. As it did right here, and going back in the market, even in the intraday time frames. So I implore you to watch those prior videos because I go into all that stuff. Now, let's have a look at this short-term wave structure and see if we're able to identify whether we've yet begun this fifth wave or whether we're still correcting. What's the evidence to support, perhaps, that we have begun the fifth wave down? Okay, we're looking at the 50-minute chart of the S&P 500 stock index. So what I want to do is rewind to the last video that I did, in which we established that we were in fact likely in a double zigzag formation in the fourth wave. That also taking the form of a bear flag. We were able to establish that channel right there, and what I said was I thought there was potentially a little bit more upside based on the wave structure. We did in fact get that to test that upper boundary of the channel line. From there, I believe we had a first wave down, a second wave up, a third wave down, very minimal retracement in the fourth wave, and then a fifth wave down. That is entirely possible because of the fact that we had a very maximal retracement right here. Now, you could also consider this right here to be the fourth wave. Problem with that is I think it fits a little bit better with the overall wave structure being right here, and that this push up does meet the minimal requirements for a fourth wave. Very minimal, but minimal requirement nonetheless. From there we had that smaller fifth wave completing what I believe is the first of the fifth wave. Now here's where it gets a little bit more hazy for me. Did we have a 5-wave rally or a 3-wave rally right here? If it was a 5-wave rally, this would suggest that this was an A, we had a B wave, and then we should see a C wave erupt, bringing us slightly beyond this point but below this point right here, before terminating the second wave of the fifth wave. Again, the possibility still exists that I misread some wave structure, because this is not the cleanest wave structure I've ever seen. In that we could still be working on a triple zigzag or triple 3 formation here in the fourth wave. I think that's less likely. I put that as a very low probability here at the moment. But of the two top counts here, we would either have a 3-wave rally up to complete the second wave up of the fifth wave down, or that we are still working on the second wave up of that fifth wave down. So we'll just wait and see what happens. There are different potentials here, but I still am of the opinion that this is a 5-wave decline right here from this point. It looks to me that way based on the MACD histogram, the RSI, things of that nature, which help you identify wave structure. It's just that this one is a little bit unclear. It does fit the form of a zigzag, but some Elliottians were counting it as a 5-wave rally, and I can see validity in that as well. We're just going to have to wait and see. I don't have enough reason to believe one way or another, but I think just a little bit more strongly that this is probably a 3-wave rally, and that we had a 5-wave decline right here, and that we may still see a little bit of upside, but that it shouldn't necessarily exceed this point right here. We'll just have to wait and see. Even we could break down immediately right away next week below the lower boundary of this larger bear flag or channel right here, and that will help confirm that that fourth wave is over. In fact, we are moving on in that larger fifth wave down. So let's wait and see what next week brings us. I am certainly favoring that the larger fifth wave is underway, but I'm just not sure whether we're expecting that decline to resume right away next Monday, or that we're going to see a little bit of upside before that larger third of fifth wave begins. So we'll just have to wait and see here. It could have already begun in the first of third wave, but we'll wait and see. Have a great weekend, guys. I look forward to making a video for you next week. Please post a comment or give me a thumbs up if you would appreciate, or if you wouldn't mind. I would certainly appreciate you doing so. See ya.